Welcome to the Equity Team Podcast, where we provide Sedona, Arizona real estate insight to help you thrive during your next real estate transaction.
All right, welcome back, investors. We've got another really fun episode for you here today. Joined with us is Chris, who is a client. He purchased a property in Sedona. That's a short-term rental. And I thought it'd be really helpful for investors out there to kind of hear his story and what the experience was like for him. Chris, thank you for joining, and thanks for helping out the investors. Thanks for helping out our audience.
Yeah, no problem. Happy to do it.
Yeah, it's awesome. So diving in, just a little bit of background here. So Chris and I, back in the day, we kind of met online. He found me with some of my other material and kind of heard about me as far as being a short-term rental specialist. And so we had our first, Zoom chat. It's a way I really like to connect with new clients so that I can show properties and all of that kind of thing. But we just kind of jumped into the deep end and just started looking, online, looking at properties and running kind of short-term rental return analyses on properties. And so eventually put in an offer and got it accepted, went into escrow, did inspections, and that property needed some work. So this is going to be good to kind of hear Chris's version and his story on events and how things are looking now compared to how they were looking then, and what he's gone through with this whole thing and how it's performing now, of course. So how is your property? Let's start kind of current and work our way backwards. How's your property doing now?
It's doing pretty well. The first 6 months or so is a little tough. You're starting from zero. You don't have any reviews. So it takes a while to build reputation, but things are going pretty well right now. I was just kind of looking at the numbers, getting ready for this call, and with the reservations we have on the books already through the first half of the year, I've already got 75% occupancy, which will only go up from here as we'll fill in some of those empty dates that are still left. Yeah,
that's amazing. And my expectation is, especially since you're already 75% occupancy for 2024, you're probably going to hit 85, 90% occupancy, if not better, by the time we get to the end of the year, just as it fills in. So I'm really excited about your property.
Hopefully. And then, the occupancy is great. I will say that the average daily rate is a little lower than I expected going in. I think that plays into why the occupancy is so high. I think that when my rate's a little low, that pushes me up in the search results on the OTAs and helps me get bookings. So, there's a trade-off there between rate and occupancy.
Yeah.
But overall, the numbers are pretty close to what I was hoping for when I started.
Good. Based on that occupancy, here we are halfway through first quarter of 2024, and you're already 75% occupied for the year. That's an indicator. First half of the year. Oh, thank you. So yeah, first half of the year. That's an indicator to me that your ADR is probably low, like you said, and so you'd make a lot more money this year if you bump it up, even 5-10%. Bump it up a little, and that's going to serve you well.
Yeah, and we did that a few weeks ago, and the reservations have definitely slowed down a little bit, but it's hard to say whether that's because of the rate change or just because there's not that many dates available, for the first half of the year when people are looking. For sure.
Chris, your story with what's happened with this property is a little bit more challenging than average. The average client that I have, we don't have like these kind of surprises that sort of surfaced for you. So I would love for the audience, for the investors that are watching this, to kind of be able to learn from what you've gone through. So how would you describe let's start with the early process. So as far as us meeting and kind of talking and planning and lining up the financing and all of that part went pretty smoothly, but let's start there. How did that feel? How did that go for you?
Well, I think, going all the way back to the beginning, it did take a while to find a property. I was probably, searching for about 8 months, with your help. And I had honestly just about given up. And then you came to me with a few opportunities that ended up one of those worked out. It was a home that I liked, and the numbers worked, and so that was exciting. So I had to be patient, and to find just the right property. But the buying process overall went pretty smoothly. I mean, it was a little, I wouldn't say difficult, but probably more time consuming than I expected to get the financing and to get the insurance.
Mhm.
Some of the financing was maybe a little bit unique to me since I'm retired and I don't have a monthly income stream. I'm living off my savings. It was kind of tricky for banks want to calculate your debt to income ratio. What's your monthly income?
Yep.
So, I had to find the right loan product
Mhm.
that would fit for my profile.
Yeah.
And also the insurance, I had to go, I tried 4 or 5 different insurance companies. You have to find one, short-term rental policy is different from your standard homeowner's policy. There's different coverages that you need. So you had to find, it took me a while to find that. And also there were some companies that were avoiding Sedona, more conservative ones just because of wildfire risk. It's in the middle of a national forest. So
and at that time there was a burn going on. There was a fire, and so they were a little bit. Their hackles were up a little bit. The insurance companies.
Yeah, and that's not unusual. We lived in California as well, and you kind of face the same thing there. Even I was in the middle of a huge suburban area, but there is a little bit of there's always, if there's some huge conflagration, I suppose there's some risk. But so some companies just avoid those areas completely.
Yeah, that's right. And of course, like as is normal, as is typical for these transactions, we got inspections. And so how did you feel about that part of the process?
Yeah, that's kind of where the surprises happened, I would say, because this was a pretty new house that I bought. So I was thinking, okay, going in, there's not going to need to be a lot of work done. But the inspection did uncover a lot of deferred maintenance things and I think looking back, the owners of the house were investors, and so I think they were not, they were probably not putting the money into it. That needed to be done on they weren't doing the infrastructure type things. They were doing the fun, shiny object type things to make it look.
That's right.
Attractive.
They tried to really leverage their dollars that they could sell it for the most possible and move on.
Right. So luckily, we had negotiated some concessions from the seller, so that covered a chunk of that. But there was more, and there was more that came up. I had a structural engineer came in after the close just to check on some other things, and that that even uncovered not a huge problem, but other investment that I needed to make to really get the house solid for the long run. But I don't think there's anything that I would have done differently because I got a pretty good deal on the house as it was, and so I had some room to to sink a little bit more money into the repairs and getting it up to the standards that it needs to be a rental.
Yeah, and of course, Chris, that's music to my ears, because not only was this thing, it was challenging, which isn't music to my ears, but even with the challenges and some unexpected costs, that it still has worked out really well for you. And here you are, finally, you're at a position where you've got a performing property. It's cash flowing. The at least the next 6 months or so, or next 4 months or so, it's looking really, really good, which is a great indicator. It should continue that way. And so I love hearing that. Do you have any advice for investors out there as far as either the during the escrow chunk of time or the after close of escrow time? Any advice based on your lessons you've learned through this?
Not so much then. I think, I think going into it, you've got to expect some surprises. So I think and luckily I did. I think having a little cash cushion is important, so you can absorb some of these early things. You might take a little more investment up front, and there are slow periods in the revenue as well. So you've got to get through those early on until you can really get things going. So I have a little extra cash cushion, I would say, and I had a little bit of even with these surprises, my cash on cash returns I just re-looked at it this morning to get ready for this discussion, and it's only dropped 1% from what I had modeled before we got started.
Okay.
So it's pretty close, and I kind of had allowed for a little bit of downside, in case there were some surprises.
Okay, good deal. And that percentage return should only increase as well. Not only as the bookings fill in, but also as your ADR increases and all of that, it's gonna build on there for you. Now, without giving any of your secret sauce away, your secrets, what would you say has really helped to boost your short-term rental performance? Whatever you're comfortable sharing.
Sure. I think I would probably highlight two things. I think the location of the property, I'm always in real estate, location. So that's no secret. But I think in my case, I think it's really helped. My property is really in the center of things. So I can really promote that fact pretty heavily in my listing. And, when people, I think a lot of people, when they're searching on the OTAs, they're looking at a map, especially people that have been to Sedona before. They kind of know where they want to be. Yeah. So they're searching on a map. So that location is key. And the second thing is for me, I think having a pool has made a big difference, because I know a lot of my guests are booking it because of the pool. I can tell because they're asking questions about it, and and then that also helps me have pretty strong revenue in the summer months.
That's right.
When it's July and August, when it's pretty hot in Sedona. Yeah, properties that I have a pool, are still going to get booked when others, that's kind of a low season.
That's right.
Overall, because of the heat.
That's exactly right. Yeah.
So I think those two things have been help. I know, last July, when on the national news, all you heard every day was in Phoenix, it was above 110 degrees every single day. I still had 70 or 80% occupancy last July. Because of the pool. Yeah, that's right. Okay, cool. Now, if you're comfortable sharing it, any further improvements that you're planning to make to your property to further boost it? Well, that's a little bit undecided. I'm still kind of digesting the purchase. We're still within year one of my purchase, but there's definitely space to add more sleeping capacity. I could add, up to 4 more beds probably if I wanted to.
4 more beds or 4 more occupancy?
4 more single beds, so 4 more to the occupancy.
Okay.
And then also a bathroom. That's probably the first step I would take is to do that project. But that's a big decision. I haven't reached it yet. It's a big decision because in order to do that, not only do you have the expense of the project, but you have to shut down the property while it's going on. So you're giving up revenue as well. So it's I'll have to really run the numbers and go back to looking at comparable properties that look like the house that I would want to become, and see how much extra revenue I might be able to get, and then kind of do the math. So
and by the way, knowing your property, and this is good just for people to kind of hear this, but based on knowing your property as I do, adding the extra occupancy and the bathroom, it's probably going to boost your annual revenue by it's pretty significant. I mean, at least 20%. And what a lot of my other clients are doing is when they have projects like that, they plan ahead and they block off like mid-January until end of February. And they try to just bang it all out in a month and a half. And if it's all lined up, usually it's not a problem. But you got to make sure that it's all done before March and that you're ready for those March bookings, because that's a very profitable month. March is a really good one. But yeah,
you definitely want to do it,
time.
doing the work during a low season.
Yeah.
To minimize the revenue loss, obviously.
Right.
And you really, I'm probably going to look for a very most reliable contractor I can find, that somebody that hits their deadlines. You can't have them. You want to shut down the property for as short a time as possible, and you need them to hit their
deadlines. That would be a crushing blow if the contractors dragged their feet and it took 3 months instead of a month or a month and a half. It would really crush your income.
Yeah, that would be very bad, because if you have to cancel on people, that's one of the worst things you can do.
Yeah. Okay. Now, last question I have for you, Chris, is do you plan to buy another short-term rental in Sedona?
I may. I'm still undecided on that as well. But I think, originally I'd set out thinking that I was going to buy 3 properties in 3 different locations: one in the desert, one in the mountains, and one at the beach.
Mm-hmm.
But now that after having gone through this process, I can see the advantage of having all the properties in the same location, because it really, what's pretty critical to your success is you got to have a good team around you, and it takes a while to find out to put that team together. And once you have it, I think it's you kind of be nice to leverage that again. And by team, I'm talking about not just your property manager, but contractors that are going to work on your house, that you can trust. And cleaning people and all that kind of thing. And then also there's an advantage of having in one place. You really get to know the market. You get to know your competition. You just have one market to keep an eye on. You can really pay close attention to it. Yeah. And then lastly, I would say, I personally, I travel out and I do some of the work on the property myself, and we like to spend time there. So having all the properties in one place, that means I can just go take one trip, work on multiple houses at the same, in one trip, and then get in and out.
Yeah. Cool. Well, that's great. Chris, thank you. So is there anything else you'd like to add before we jump off?
No, I think we hit all the highlights.
Cool. Awesome. Thank you so much, Chris. This is really helpful. I'm sure that investors out there really appreciate your time and kind of clarification of what you've gone through. And I'll talk with you soon. Thanks again for joining.
You bet. Take care.
All right. Take care.
Thanks for tuning in to the Equity Team Podcast. To speak with one of our top agents, visit us at owninaz.com. That's owninaz.com. Or call us at 928-323-0031.